Bismillahirrahmanirrahim. Assalamu alaikum. Viewers, you are welcome to my YouTube channel, Finance Specialist. Viewers, on this channel, you can find videos on different topics regarding statistics, accounting, finance, and Islamic banking. Viewers, before proceeding on this video, you are requested to like, share and subscribe to my channel by pressing the bell icon so that you could get the intimation of my future videos. Viewers, in this video I will talk about one of the important concepts in Islamic banking, which is called as diminishing musharakah. In Arabic it is called as Musharakah Mutanaqisa. Viewers, I'll talk about diminishing musharakah, and in this video I will cover its introduction, the basic structure of diminishing musharakah, the Sharia principles governing diminishing musharakah, and one illustration example followed by a calculation in Microsoft Excel with the help of numerical example. So let's start with the concept of musharakah. Viewers, when we talk about musharakah, musharakah is an Arabic term and it refers to partnership, a form of partnership, or in Arabic it is called as a shirka. There are two types of partnerships or shirka. The first is called as shirkatul milk. Shirkatul milk, it is basically a joint ownership of two or more persons in a particular property. Here in Arabic, the shirkatul milk or milk is basically the ownership of any property. When we talk about the second type of the partnership, which is called as shirkatul aqd, the aqd basically it is a contract. So a partnership is affected by a mutual contract. It can also be translated as a joint commercial enterprise. So we have two types of shirka or partnerships. One is called shirkatul milk, a joint ownership of two or more persons in a particular property, and second is shirkatul aqd, a partnership which is affected by a mutual contract. It can also be translated as a joint commercial enterprise. When we talk about diminishing musharakah, in diminishing musharakah, the financier and the client participate either in joint ownership of a property or equipment or in a joint commercial enterprise. The share of the financier will be divided into number of units. The client will purchase these units one by one periodically until he is the sole owner of the property. Viewers, one thing we need to understand is that the main difference between conventional financing and the financing through Islamic bank, there is a main difference. Commercial banks, they lend money and they get interest, they charge interest. But the Islamic banks, since the riba or the interest is prohibited in Islam, so they will not simply lend money and charge interest over it. So what Islamic banks will do, they will transform this transaction into asset-based transaction, into trading-based transaction, whereby any property, when a customer comes to the bank, so the bank will ask the customer's requirement, and then the bank and a customer, they will sign an agreement and they both will buy a property. Obviously the customer share will be less and the bank share will be more. The bank then divides its ownership over the period of time which suits the customer's requirement, and since the customer is using that property, so the customer share normally in that property is less and the bank share is more, so the customer will have to pay rent to the bank for using its share. With the passage of time, as much installment when the customers will pay, so the share of the bank will sell its ownership units to the customer. So with the passage of time, the clients or customer share in that property, it will increase, and the bank share in that property, it will decrease, and automatically it will affect the rent also, because when customer share will increase, the customer will have to pay less rent. And towards the end, the property of uh, the ownership of the property, it will be transferred to the customer once the customer would buy all the units from the bank. So here in diminishing musharaka, there are three components. Let's have a look at them. The first one is the joint ownership of a bank and a customer. The second one is the customer as a lessee uses the share of the bank, as I have mentioned in my previous discussion, that whenever a property is purchased jointly by the customer and the bank, since the customer share is less and the bank share is more, so the customer would be using the share of the bank in that property. So the customer will have to pay a rent of the bank share which the customer is using. And then redemption of the share of the bank by the customer would buy all the units monthly basis or quarterly basis or semi-annually basis, whatever are the terms and conditions between the customer and the bank. So the customer would buy all the units from the bank, and towards the end, when customer would purchase all the units from the bank, the property, it will be transferred in the name of the customer. So diminishing musharaka, uh, we can say that it is a mode of fixed asset financing. It is commonly used for the purpose of financing fixed assets by various Islamic banks. House financing is the main area where this facility is used. Car financing, diminishing musharaka can be used. Plant and machinery financing, and all other fixed assets, this mode of financing can be used. In Arabic, diminishing musharaka is called as Musharakah Mutanaqisa. So let's have a look at the basic structure. Uh, as you can see that one side there is a bank, the other side there is a customer. The customer would approach the bank with the request for project, machinery or house financing. So what bank would do? The bank enters a musharaka or joint ownership agreement with the customer, and both will pay their respective shares to the seller of the asset. So as you can see, between a bank and a customer, there is an agreement of partnership which we called as musharaka, a joint ownership. Bank and customer both own that asset jointly. The client promises to purchase the bank's share or units over the tenure of the transaction with the help of undertaking to purchase. After the purchase of an asset, the client will have to sign an agreement with the bank that the client will buy the bank share. For example, if a property price is $100 and customer has contributed $20 and bank has contributed $80, and the property is used by the customer, so it is in the usage of the customer, so the customer owns only 20% of that property, while the 80% of the property belongs to the bank. So the customer would pay rental to the bank, and with successive payments of installment, the customer will buy units, one units after each month, or a quarterly or a semi-annual or an annual basis from the bank, as per the terms and conditions mentioned in the contract. So the successive purchase of units, the bank's units by the customer over the period of time, will lead to increase the customer's ownership in that property, and it will reduce the bank's ownership in the property. So with the passage of time, the bank's ownership will reduce, and obviously the customer ownership in that property will increase, so customer will have to pay less rental to the bank. So here you can see that the customer would pay rent to the bank. In this arrangement, the bank will gradually transfer the ownership, the units to the customer. So client promises to purchase bank share over the tenure of the transaction with the help of undertaking to purchase, and customer pays rent for the use of bank share in the property. Client purchases the units every month via a separate offer and acceptance every month and will eventually become the owner of the property. Ownership of the asset, it will be transferred gradually to the customer upon payment of assets price with the help of sales transaction between bank and the customer at the end of each period. So let's go through with the Sharia principles which governs diminishing Musharakah. So Sharia principles, first, to create a joint ownership in the property which is called as Shirkatul Milk and is expressly allowed by all schools of Islamic jurisprudence. All Muslim jurists agree on the permissibility of the financier leasing his share in the property to the client and charging him rent, that is, the permissibility of leasing one's share to his partner. There is a difference of opinion among leasing one's share to a third party, but there is no difference in permissibility on leasing to a partner. So, promise of the client to purchase units of share of financier, it is allowed as per Sharia principle. The transactions cannot be combined in a single arrangement and they must be executed independently. This is because it is a well settled rule of Islamic jurisprudence that one transaction cannot be made a condition for another. Like, if you do this, then I will do that. Instead of making the transaction a precondition for one another, there can be one-sided promises from one party to another. Let's understand diminishing Musharakah example with the help of one illustration. Assume that there is a customer which requests financing for a fixed asset that costs $3 million. The time period of this financing is 5 years. So what will happen, that let's say Islamic Bank agrees to provide financing up to 90% of the cost. So this will be 2.7 million US dollars and the remaining 10% will be shared by the customer itself, which is $0.3 million. So a joint ownership agreement will be executed between the bank and the customer. So the bank share, obviously the 90% contribution of the bank, it will be divided into 5 units because in this example uh, the finance term is up to 5 years. And then the customer agree to buy out the bank share or units on yearly basis and the undertaking is executed by the customer. Customer pays the rent for the usage of the bank's units as I have discussed earlier, and the rental reduces after purchase of each unit by the customer. After 5 years, the ownership of the asset, it will be transferred to the customer completely. Let us understand this scenario with the help of diminishing Musharakah schedule in Microsoft Excel. I'll give you another example. So let's move on to the Excel example. Let me increase the font size. So here Let's assume that a customer wants to buy a house and the house cost, let's say, in terms of 1 million reals Omani. The currency could be any. So the bank financing is 80% and the tenure of this arrangement is 10 years and the rental rate is 7% per annum of investment, and the purpose is home purchased from the market. Since bank is financing 80% of the total cost, so obviously that the customer share it will be 20% only. So let's have a look. Here the bank share, which I'm going to highlight in yellow, it is 800,000 and the client share is 200,000. So the total value of the property will become a million. Now the bank share is 800,000 and bank will have to sell its share to the customer over the period of time. So what will happen? The bank share it will be divided over the period of 10 years, and since it will be paid monthly, so the bank share of 800,000 it will be divided by 120 because in 10 years there will be 120 months. So every month the customer, when it will pay the installment, so the customer would buy one unit over the period of time. Like every month the customer would buy one unit from the bank so that the customer's ownership in the property it will increase and the bank's ownership in the property will decrease. So here you can see that the price per unit is calculated by simply dividing the bank share by the total number of months. Similarly, to calculate the rent, because customer has to pay initially only the 20% and the customer will be living in the house which is purchased jointly by the bank and the customer. So customer will have to pay rent because the customer is using 80% of the bank's property. So how to calculate the rent? Let's say initially the rent will be the 7% rate which is already given. So 7% of 800,000 which is the bank share initially. So it will give us 56,000 and this will be the annual rent. So we need to divide it by 12 to get the monthly rent which comes 4,666. Now as you can see over here, uh, I'm going to prepare one schedule. This schedule I've already prepared, but for the sake of your understanding I'll prepare it again beside this table. So here you can see, let me copy all these titles. Months, units, the total amount and the investment. So here it comes, number of months. So at time 0 what will happen? At time 0 there will be no unit purchased. At time 0 no unit is purchased and there will be no rental. Let me copy. There will be no rent at time 0 and there will be no total at time 0. Number of units, in fact they are 120 and the investment from the bank side it is 800,000. And then the time counter will start, let's say first month, second month, third month. So here it comes. I'm just going to double click on it or drag it down. So I'm just going to drag it up to 120 months. So here you can see up to 120 months, because in 10 years there will be 120 months. So as you can see, 120 months will come. Now we the unit price we have already calculated by dividing uh, the the bank share by 120, and we got over here that the unit price every month it will be the same. So it is 6666. So here I'm going to write 6666.67. So this is what the unit price, and this will remain same. So I'm just going to double click over it, so it will come the same up to 120 months, because it is not going to change, so it will stay the same. Now here you can see this is the investment. Now what will happen, that from the investment, the bank share, after every successive purchase, the bank's investment it will come down. So here what I'm going to do is I'm just going to subtract from this value the unit price. Simple as that. So when I subtract the unit price, and then I will just drag this column down, so you will see that the bank's investment it will reduce, and up to, by the time it will reach month number 120, so you will see that the bank share will be 0. So this is what I have calculated. Now you can see over here the rental. The rental will be calculated on the basis of outstanding share of the bank, and the rate is already a 7%. So for that calculation we can simply use this outstanding balance. Like the first it was like 800,000, and now we need to calculate the rent. When the bank share it will become like 793, so we will have to calculate the rent. So here you can see uh, the bank share, I mean the first rental it will be the same, because we have already calculated it's the very first payment. So it will be 4666.67. So this is the rental amount. So you can see that the total amount, the total installment which a customer will have to pay, so we can add these two, because one is the unit price and second is the monthly rental. So here it comes 11,333. And here you can see from here, once one installment is paid, so total number of units will become less. So here I'm just going to write 120 minus I'll click 1, because every month, one month it will be reduced. So here I'm just going to put F4, so that with every successive uh, you know transaction, this value will stay the same. Okay, so now you can see over here that the rental, the first rental we have calculated is over here, the first one is the same, and the second rental will be, it will be the 7%. So we know it already. I can even apply a formula over here for better understanding. So let me put a formula over here. So it will be like equal sign, this is what the investment, and multiply the rate, which is 7%. So simply I'll click it over here, we'll press F4 so that it will not change. 7%, it will give us the rental, and then this value we need to divide by 12, because it is annual. So I will again press F4 so that when I drag this value down, so it will not change. We'll click enter. So you can see, let me reduce the decimals up to 2. So this is what the initial rent. When I drag it down, so all these rental values will be calculated on the outstanding balance of the outstanding ownership of the bank. So if I drag it down, so you will see the next rent will come less, and then I'll drag it up to the end. So this will give me the rental payment. You can see, so all this rental payment will come. Since I've already calculated the total is basically the unit price and the rent. So simple is that. I'll bring cursor over here and double click over here, so it will give us the rental payment. And here when it comes to units, after 1 month the outstanding units will be 119, and you can see successively it will become 118. Like that it will reduce, and finally when I double click, you can see that towards the end the ownership of the bank will become 0. So it will become 0, 0. So this is how we can calculate diminishing Musharakah schedule for any asset financing. So I hope you would have understood uh, the mechanism, that how we can prepare the schedule of diminishing Musharakah. So this was the example, a practical example using Microsoft Excel, which you have experienced, you just saw it. Uh, that's the end of my discussion. Thank you very much for watching, and towards the end I would say to subscribe to Finance Specialist channel by simply clicking on subscribe button at the right bottom of this video, by pressing the bell icon to get the intimation of upcoming videos. You can share your thoughts in the comment section, any suggestion, any improvement which I can make in my videos. Stay blessed. Thank you very much.